Let me say something that's going to sound completely wrong at first. Being honest with yourself might be the reason you're not profitable yet. And before you click off, I'm not saying lie about your losses. I'm not saying pretend you're a great trader when you're not. But if you've been trading for a while, you've studied, you've back tested, you know what you're doing, yet somehow the results don't reflect that. This is probably the most important video you'll watch this year, because here's the uncomfortable truth nobody tells you. Most traders aren't failing because of strategy, entries, or indicators. They're failing because of the story they keep telling themselves right before they click buy or sell. And the wild part, the traders who actually become consistent aren't more honest than you. They're better at choosing which truths to believe during execution. So in this video, I'm going to show you how lying to yourself in a very specific way can completely change how you execute, manage risk, and stay consistent without delusion, without fake confidence, and without motivation or nonsense. If you've ever felt like you are one mindset shift away from things finally clicking, stay with me, because once you see this, you won't hear your inner dialogue the same way again. Let me mess with your head for a second. The traders who become profitable are not more disciplined than you, they're not more intelligent, they're not even more experienced. They're just better at lying to themselves. And if that sounds dangerous, good, it's supposed to, because the version of being honest with yourself that you've been taught is quietly sabotaging your execution every single day. If you've ever known exactly what you should do on a trade but still hesitated, exited early, or messed it up, this isn't a strategy problem, it's a belief problem. If you want to see how I actually think during live market conditions, not hindsight, not screenshots, I run a Discord where I break down the market in real time. It's focused on context, bias, and execution, not signals and noise. You will see how I frame the day, what I'm waiting for, and just as importantly, what I'm not trading. And for those of you who want to go deeper, I also offer one-to-one bespoke mentorship that's tailored to you, your psychology, your execution issues, your schedule, not a copy-paste system. If you're tired of surface level content and you want structure, clarity, and accountability, then you'll find the links below of this YouTube video description. No hype, just real work. Before this sounds like another mindset video from someone who's figured it all out, let me be very clear about something. I wasn't always consistent, I wasn't naturally disciplined, and I definitely wasn't born with some elite trader mindset. For a long time, I did everything traders are told to do. I journaled every trade, I back tested until my eyes hurt, I watched hours of market breakdowns, and on paper, I sounded like a serious trader. But in execution, I hesitated, I second-guessed clean setups, I took profits early, then watched price go exactly where I originally planned. The frustrating part wasn't that I didn't know what I was doing, it was that my results didn't match my understanding. And that's when I realized something uncomfortable. I wasn't losing because of my strategy, I was losing because of the conversations I was having with myself right before execution. I kept telling myself I was just being realistic, protecting capital, staying grounded, but in reality, I was training my brain to hesitate while pretending I was being responsible. Everything changed when I stopped trying to be brutally honest with myself in the moment and started being strategically honest instead. And that's the difference. I'm not sharing this as a theory, I'm sharing it because it's the exact shift that finally made execution match my skill. When I say lying to yourself, I need you to understand what I don't mean, because if you misunderstand this, it becomes dangerous. I'm not talking about delusion, I'm not talking about ignoring losses, I'm not talking about pretending you're profitable when you're not. That's not confidence, that's denial, and denial in trading is how people blow accounts. What I am talking about is something way more specific. Choosing a belief that improves your execution, even if you don't fully feel it yet. Because here's the truth, trading isn't just analysis, it's performance. And performance isn't driven by what you know, it's driven by what you believe in the moment you have to act. So when I say lie, think of it like this. It's not lying about reality, it's lying about identity and certainty while you build the skill. Let me give you a clean distinction. Bad lies are result lies. They sound like this trader has to win, I can't lose today, or I'm due a winner. Those lies create emotional attachment, revenge trading, and over risking because now your ego needs to price, well, it needs price to behave. Good lies are process lies. They sound something like, I'm the kind of trader who executes my plan. I don't need certainty to execute. My job is to take clean trades, not to be right. Do you notice what's happening here? One set of lie tries to control the market, the other set of lies controls you. And this is where most traders get it backwards. They try to be honest by constantly reminding themselves of everything that could go wrong right before they execute. Don't get excited, you always mess it up. Be careful, you're not consistent yet. That sounds mature, but it's actually sabotage. Because you're teaching your nervous system to associate execution with danger. So your hand hesitates, your mind second guesses, your trade management turns emotional. So here's the reframe I want you to hold for the rest of this video. Lying to yourself is choosing a mental script that creates clean execution, not fake outcomes. You can be fully honest in your journal after the trade, but during execution, you need a belief system that keeps you stable. And if you're thinking, okay, but is that actually real or am I just hyping myself up? Good, because next I'm going to show you exactly why brutal honesty fails traders and what's happening in your brain when you keep feeding yourself doubt right before you click buy or sell. There's a reason athletes don't perform while reminding themselves of their worst games. Your brain follows the story you repeat, especially under pressure. Here's the part that usually makes people uncomfortable because it sounds mature, responsible, and even intelligent. But it's one of the biggest reasons traders stay stuck. Brutal honesty at the moments of execution is not strength, it's self-sabotage. Think about what being honest with yourself usually sounds like in trading. Right before you enter a trade, your mind starts saying things like, this could easily fail, last time I took this setup I lost, or be careful, you're not consistent yet. And on the surface that sounds wise, it sounds grounded, it sounds like you're protecting capital. But let me ask you something important. What do you think your nervous system hears in that moment? It doesn't hear risk management, it hears threat. And once your brain senses that, execution quality drops, and it drops fast. As your focus narrows, your timing gets sloppy, you hesitate on entries that you plan for hours, and you grab profits early just to feel safe again. This is why traders can analyze perfectly and still execute terribly, because analysis happens in a calm state. Execution happens under pressure, and pressure exposes whatever belief system you've been rehearsing. Here's the hard truth most traders don't want to hear. Brutal honesty increases cognitive load. When you remind yourself of every possible outcome, past mistake or inconsistency right before execution, you overload your decision-making capacity. Your brain is now trying to manage risk, predict outcome, protect ego, avoid pain, and execute all at the same time. So something has to give, and it's usually execution. This is why so many traders, they say things like, I know exactly what to do, I just can't do it consistently. That's not laziness, that's not lack of discipline. That's a nervous system that's been trained to associate execution with danger instead of routine. And here's the most ironic part. Traders who are brutally honest after the trade improve faster than traders who are brutally honest during the trade, because honesty is incredibly useful at the right time. Post-trade honesty builds awareness. In-trade honesty destroys performance. For example, athletes, they don't step into the field reminding themselves of their injury history, and surgeons don't replay past mistake before picking up the knife. Not because they're delusional, but because performance requires clarity, not commentary, and trading is no different. If you keep telling yourself, I'm just being realistic, while your execution keeps falling apart, then maybe being realistic is not the virtue you think it is, at least not in the moment that actually matters. And this is where things start to click, because once you understand why brutal honesty fails, you can start using belief intentionally, not to fake results, but to stabilize performance. And that brings us to the real problem that traders don't talk about enough: the identity level truths that you repeat every single day and how they quietly dictate your results. Up until now, it probably sounds like the problem is what you think before a trade, but that's just the surface. The real problem runs deeper. It's who you believe you are as a trader, because long before you click buy or sell, you've already decided what kind of trader you are, and your execution is just you staying loyal to that identity. Now, this is the part most traders never question. They don't just say things like, I took a bad trade. They say, I'm impulsive, I always mess up winners, I'm not disciplined, or I can't hold trades. And at some point, those statements stop being observations and start becoming rules. Here's why that's dangerous. Your brain is constantly trying to stay consistent with the story you tell about yourself. So if you identify as someone who panics, your brain will look for moments to panic, even in good setups. If you identify as someone who always exits early, holding a trade suddenly feels unnatural, uncomfortable, almost wrong, not because the trade is bad, but because it violates your self-image. This is why so many traders say, I don't know why I did that. You do know why. You just acted in alignment with an identity that you've been rehearsing for months or years. And here's the uncomfortable part. Most of these identity level truths were never consciously chosen. They were formed from a handful of emotional moments. For example, a blown account, a bad losing streak, a few painful losses in a row. And instead of saying, I went through a difficult phase, the brain says, this is who I am. That's not honesty, that's overgeneralization. In psychology, this is called identity fusion, where behavior becomes who you think you are. And once that happens, every trade becomes less about probability and more about proving the identity right. That's why traders who say, I'm terrible at holding winners, will find a reason to exit early even when price is behaving perfectly. Not because they're undisciplined, but because holding would contradict the identity that they're trying to protect. This is where lying to yourself becomes not just helpful but necessary, because you don't change identity by analyzing it, you change identity by acting in advance of it. You don't wait until you feel disciplined to say, I'm a disciplined trader. You say it first, then you force your behavior to catch up. And no, that's not delusion. That's how identity is built in every performance domain. Sports, business, military, surgery. Identity is not a reward for consistency. It's the tool that creates it. So if you keep repeating identity level truths that describe your past, then don't be surprised when your future keeps recreating it. And once you understand that, the next question becomes obvious. If identity shapes behavior, what actually happens in your brain when you start choosing a different one? That's what we're going to break down next. So now the question is, why does this actually work? Like, what's the mechanism here? Here's the simplest way to understand it. Your brain is a prediction machine. It's constantly scanning for evidence to support whatever it already believes, especially under pressure. So if your belief is, I'm inconsistent, your brain will notice every tiny mistake, every shaky entry, every early exit, and it'll ignore the moments where you actually executed well. Not because you're broken, but because your mind is doing its job, confirming the identity. This is why lying to yourself works, because when you choose a new belief, you change what your brain filters for. Let's break it down into a loop. And once you see this loop, you will start spotting it in real time on your charts, where belief goes to behavior, to outcome, and then reinforced belief. So here's what it looks like in trading. You've got your belief, which is I always mess up good setups. Then the behavior is you hesitate, you look for extra confirmation, you move your stop, you reduce size randomly, or you exit early. Then the outcome, the trade either loses because your management was messy, or it wins but you took a say 0.3 R and you feel frustrated. And then the reinforced belief becomes, see, I told you I'm not that guy. And now the identity is stronger. That loop is happening in the background of your trading, whether you're aware of it or not. Now let's flip it. Here's the productive live version, the one that creates profitability over time. So the belief would be, I'm the kind of trader who executes cleanly. It's important because you might not feel it yet. You might even think it's cringe, but watch what it does. It will change your behavior where you execute the plan because your brain is now trying to act in alignment with that identity. You place the trade with less drama, you stop searching for reasons to avoid the click, and in the outcome, you get cleaner execution, which means your system's edge actually has room to play out. Even when you lose, it's a clean loss, not a self-inflicted one. And then the reinforced belief becomes, that's what I do, I execute. And then suddenly, discipline is not a willpower anymore, it's your new identity. Now, here's the part that makes this feel almost unfair. Your brain doesn't need a belief to be 100% true to start responding to it. It just needs repetition and emotional relevance. This is why people become confident at bad habits too. They repeat them enough and it becomes who they are. The same mechanism works in your favor when you use it intentionally. And there's a name for one of the biggest drivers here. It's called self-fulfilling prophecy. You may have heard of that before. So you believe you'll mess it up, so you behave in a way that messes it up. Then you use the result as proof. It's not that the market is punishing you, it's that your identity is driving your behavior, and that behavior is shaping the result. And if you want the simplest brain explanation without getting nerdy, your attention follows belief. If you believe that this setup is risky and not consistent, you will notice every tiny wick against you, every micro pullback, every reason to panic. But if you believe I execute my plan and I accept the outcome, you stop staring at every tick like it's life or death. Same chart, same setup, but different filter, different actions, and different result over a large sample size. And by the way, this is why traders who are genuinely skilled can look average for years, because their beliefs keep sabotaging execution, so their edge never compounds. So when I say lying to yourself, what I'm really trying to say is choose a belief that forces better behavior long enough for the outcome to catch up. Now, we need to draw a hard line because I don't want you taking this the wrong way. So next, I'm going to show you the difference between useful lies and dangerous lies, and exactly what you should never lie to yourself about as a trader. Okay, this is the line in the sand, because if you take what I've said so far and you apply it in the wrong way, you don't become profitable, you become delusional. And delusion in trading is expensive, so let's make this painfully clear. There are useful lies and there are dangerous lies. The easiest way to understand it is this. Dangerous lies are about outcomes. Useful lies are about process and identity. That's it. That's the whole game. So let's start with the dangerous ones, because these are the ones that quietly destroys traders. So you'll have dangerous lies like that this trade has to win. I'm due a winner. I can't lose today. This is the one that makes it back. Price has to go to my target. That is not confidence. That's attachment. And attachment makes you do stupid things like you widen your stops, you add to losers, you revenge trade, you ignore invalidation, or you hold because you need it, not because it's logical. Outcome lies turn trading into emotional gambling because now you're not executing a system, you're trying to force reality to protect your ego. So let's switch to the useful ones, the ones that actually build a profitable trader, the useful lies, which will be process plus identity lies. So it will be things like, I'm the type of trader who follows my plan. My job is to execute, not to be right. Losses are normal. I don't negotiate with the market. I don't need certainty to take a high quality setup. I can feel fear and still execute cleanly. Notice what these do. They don't pretend the market is predictable. They don't promise profit. But what they do is they stabilize you. They create a mental environment where execution becomes boring, and boring is what you want, because boring execution is consistent execution, and consistent execution is what lets your edge actually show up over time. And here's a simple rule that you can use forever. If the lie makes you more attached to the trade's results, it's dangerous. If the lie makes you more committed to your process, it's useful. And here's another one that will save you money. Never lie about data, never lie about your P&L, never lie about your mistakes, never lie about your risk. Facts are facts. Your journal should be brutally honest and your review should be brutally honest. But your execution moment, that's not for self-criticism, that's for performance. Let me give you a very real example. Say you're about to enter a clean setup. Your model is there, your level is there, your stop is logical. The dangerous lie sounds like this is definitely going to work. That creates emotional expectation. So the second price pulls back a little, you panic. But the useful lie, it will sound something like, this is a high quality execution. Outcome is irrelevant. That gives you emotional distance. You let the trade breathe and you follow your plan. Same setup, but two different internal scripts, two completely different traders. Now, you might be thinking, okay, cool. What does this actually look like in real trading situations? Like, what do I say to myself? Good, because next I'm going to give you practical examples, the exact before and after self-talk scripts that you can use during entry, during drawdown, and even during management. So this stops being theory and starts becoming something that you can apply on your next trading session. So now we can make this real, because if you can't apply this on your next trading day, it's useless. So I'm going to give you a few situations every trader has lived through, and I'll show you the exact before and after self-talk. Same chart, same setup, but different internal script and different execution. So I've got 5 examples here. Example 1. The entry hesitation. So imagine you've got your level, you've got your model, you've literally been waiting for this setup, and then price taps your entry and suddenly your hand freezes. So what I can imagine most traders would tell themselves would be things like, this could easily fail, what if I'm wrong again, or let me just wait a bit more for a bit more confirmation. That sounds smart, but what in reality this does is it will just load you with doubt, and doubt delays action. And then the behavior that it leads to would be late entry, chasing trades, missing a trade, or you enter but you're shaky and you manage it emotionally. So the useful lie that you want to tell yourself would be, my job is not to avoid losses, my job is to execute cleanly. Or this is one trade in a long series, or even saying things like, I don't need certainty, I need rules. And then if you say things like that to yourself, then this is how the trade would probably play out. You still feel that little spike of fear, but instead of negotiating with it, you simply execute. You place the trade like it's routine, because it is routine. Now, example number 2, early exit, where you take profit too soon and then you watch the trade run. This one hurts. Say you enter clean, price moves a bit in your direction, then you see a tiny pullback, a wick, and then a little hesitation candle, and your brain goes, take it, secure it, don't be greedy. So the honest self-talk that would kill your trade, it would be things like, I should just take something. Green is green. I don't want it to come back to break even. Again, it sounds responsible, but it's usually fear dressed up as maturity. And what this leads to is where you'll be cutting winners short. You'll never let the edge play out and slowly dying by 1,000 small wins. So the useful lie that you want to be telling yourself is, you'd want to say things like, I don't get paid for being right, I get paid for following my plan, or my target is there for a reason, or you can say something like, I can handle pullbacks as pullbacks are normal. So before the trade even triggers, you decide, if price hasn't hit my invalidation, I simply don't touch it. So when the pullback comes, you're not thinking, you're just following your rules. Right, example number 3, the losing streak. Losing streaks aren't dangerous because of the money. They're dangerous because they change your identity in real time. After 2 or 3 losses, the self-talk starts getting darker. And then you'll have the brutal honesty spiral where you'll say things like, I'm not consistent, maybe I don't actually have an edge, or I always do this. And now every next trade is loaded with emotional weight. It's no longer a setup, it's a referendum on your self-worth. And it will lead to behaviors like skipping A+ setups or taking random B setups to make it back, overtrading, increasing risk, and even revenge trading. So you'd want to be saying things like, you want to say useful lies to yourself, such as, a losing streak doesn't mean I'm broken, it means variance is doing its thing, or my edge is proven over a sample size, not over today, or I execute the same way whether I'm up or down. And then after saying things like that, you'll have a simple application rule. After any loss, you literally say, next trade is completely independent, and you mean it, because the market doesn't remember you, only your ego does. And this is literally how probabilities work. Short-term outcomes can be messy even with a real edge. That's why casinos don't panic after a bad night. Anyways, example number 4. I need to make money today, which is a trap. This one is silent but deadly. You open charts and there's this background pressure where I need to make something today. And now you're not trading setups, you're trading emotion. And then the dangerous lie is saying things like, I have to make money today, or if I don't win today, I'm falling behind. What that does is that just simply creates urgency, and urgency creates bad habits. So the useful lie you want to be telling yourself are things like, my goal is to take one clean trade, I get paid for patience, I can have a perfect day and make nothing if there was nothing to do. And then how this changes behavior is it will stop you forcing activity, you wait for your model like a sniper, and you treat a no trade as discipline, not failure. And finally, example number 5, the post-win overconfidence. People talk about revenge trading after losses, but a lot of traders blow up after wins as well, because the ego then wakes up. And then the lie that becomes dangerous is saying things like, I'm in sync with the market, I'm on fire today, let me size up. It feels amazing, but it makes you careless. So the useful lie you want to be telling yourself instead are things like, I'm not special, I'm just consistent. Same rules, same risk, same process. A win doesn't mean I'm smarter, it means my edge played out. And then what that means is your equity curve becomes stable, not emotional. So do you see what's happening here? The lie isn't you pretending you're profitable. The lie is you choosing a script that produces stable behavior, long enough for stable behavior to produce stable results. And once you start doing this, something weird happens. Your execution becomes calmer, your trading becomes simpler, and you start looking like one of those traders who just doesn't panic. Now, there's a name for what we're doing here. It's not manifestation, it's not motivation, it's the as if principle, and it's how elite performers build identity before results even show up. Everything we've talked about so far leads to this one idea, and once you understand it, a lot of things about consistency finally make sense. It's called the as if principle, and no, this isn't manifestation, this isn't think rich and the universe delivers. This is how elite performers train before results show up. The as if principle is simple. You behave as if the identity already exists and let the results catch up later. That's it. Every high performance profession works this way, whether they call it that or not. A pilot doesn't say, once I feel confident, I'll fly like a professional. They train, rehearse, and operate as if lives depend on it, because they do. A surgeon doesn't open somebody up thinking, I hope I don't mess this up today. They follow procedure, same steps, same process. Not because they're fearless, but because fear is not allowed to rewrite the rules mid-performance. And trading is no different. Well, it's no different. The mistake most traders make is waiting for confidence to arrive before acting professionally. Once I feel consistent, I'll size properly. Once I'm confident, I'll stop hesitating. Or once I'm profitable, I'll act like a pro. That order is backwards. Confidence doesn't create professional behavior. Professional behavior creates confidence. The as-if principle flips the sequence. Instead of saying results, confidence, discipline, it becomes discipline, identity, result. You don't wait until you feel disciplined. You act as if you're already disciplined and repeat it until it becomes normal. And this works because identity is built through evidence. Every time you act in alignment with a chosen identity, your brain logs it as proof. Oh, this is what we do now. And over time, that behavior stops feeling forced. It becomes automatic. This is why traders who suddenly become consistent often can't explain how it happened. It wasn't sudden. They just crossed a tipping point where the identity finally solidified. Let me ground this back into trading so it doesn't sound abstract. Acting as if doesn't mean pretending you're profitable. It means things like you size trades the same way whether you're up or down. You follow your rules even when you feel emotional. You stop chasing because a professional doesn't chase. You accept losses without drama because it's just part of the job. You don't do these things because you feel ready. You do them because that's who you've decided to become. And here's the part most traders miss. Acting as if doesn't eliminate fear, it makes fear irrelevant. Fear can exist, but it no longer gets a vote. That's the difference between amateurs and professionals in any field. Amateurs negotiate with emotions, professionals follow procedure. And once you start trading this way, something interesting happens. You stop asking, do I feel confident enough to take this trade? And you start to ask yourself, does this meet my rule? That one shift alone will save you thousands, but there's one final piece to this. Because even when traders understand the as-if principle, they still fall into one trap that pulls them right back into old patterns. And if you don't catch it early, it'll undo all of this work. So next, I want to show you the most common relapse, the habit that makes traders abandon this mindset and slip back into emotional execution without even realizing it. This is where we make sure everything you've learned so far actually works in the real world and it doesn't turn into self-deception. Because the goal here is not to feel good, the goal is to perform better. So I want to give you a simple framework, something that you can follow every day that keeps you grounded in reality while you use belief to stabilize execution. So rule number 1. A separate execution mode from review mode. Most traders blend these two and that's where the damage happens. Execution mode is when the trade is live or about to be live. Review mode is after the trade is done. They require completely different mindsets. Execution mode, which will be during the trade, you don't evaluate yourself, you don't question your past, you don't judge outcomes, you follow rules and run your process. And then review mode, which will be after the trade, you're brutally honest, you analyze mistakes, you look at data, not emotions, and you improve the system. Facts belong in review mode, beliefs belong in execution mode. Mixing them is what causes hesitation, early exits, and emotional trading. Rule number 2, journal facts, speak beliefs. This one is huge. Your journal should be ruthless with truth. Numbers don't lie, charts don't lie. Your execution either followed the plan or it didn't. But your self-talk during trading, that needs to support performance. In your journal, write things like, I entered late, moved stops, exited early due to fear. But in real time, you say things like, I execute my plan, one trade means nothing, I accept risk before entry. You're not contradicting reality, you're controlling which mental tools you use at which stage. Rule number 3, pre-decide your scripts and don't improvise under pressure. Under pressure, you don't rise to the occasion, you fall to the level of your preparation. That applies to psychology as well, because before the session even starts, you should already know what you say to yourself before entry, what you say during drawdown, what you say after a loss, and what you say after a win. So before entry, as an example, you'd want to say, if this meets my rules, I execute without negotiation. During a drawdown, you'd want to say drawdown is normal and my SL is where I planned it. And then after a loss, you want to say something like, losses are part of my edge, next trade is independent. If you wait until emotions hit to decide how you think, emotions will inevitably win. Rule number 4, never lie about risk. This should be non-negotiable. You can lie about identity, you can lie about confidence, you never lie about risk. If your risk is too big, no mindset trick will save you. Fear exists for a reason. Proper risk management makes belief possible. Without it, every trade feels like survival. If you feel constant anxiety during trades, it's not because you lack discipline, it's because your risk is telling your nervous system that something is wrong. And now you've got rule number 5. Use identity statements, not affirmation spam. This isn't about repeating lines in the mirror 50 times. Identity statements work only when they're specific, behavior-based, backed by actions, and you'll have bad affirmation like I'm a profitable trader, but then you can have good identity statements such as I'm a trader who follows my rules regardless of outcome. One is outcome dependent, the other is fully under your control. And finally, rule number 6, let evidence accumulate quietly. Don't look for overnight transformation. What you're building here is credibility with yourself. Every clean execution is a brick, every rule followed under pressure is a brick, and eventually you stop needing the lie because the identity becomes real. That's when things get dangerous in a good way, because discipline stops feeling like effort. So this isn't about being fake, it's about being intentional. Honest where honesty improves learning, strategic where belief improves performance. But even when traders do all of this right, there's one habit that quietly pulls them back into old patterns, and it usually feels like maturity. So next, I want to show you that trap so you can spot it before it costs you your consistency. This is the part almost nobody talks about because it feels like growth, but it's actually the thing that drags traders right back into inconsistency. And if you don't see it clearly, it will undo everything we've covered so far. So the trap is this: confusing self-awareness with self-interference. Most traders don't relapse because they stop caring. They relapse because they start monitoring themselves too closely. And here's how it usually starts. You learn about mindset, you learn about discipline, and you learn about emotional control. And now during every trade, there's a new voice in your head, saying things like, am I being disciplined right now? Am I calm enough? Am I executing like a professional? That voice sounds responsible, it sounds self-aware, but what it actually does is it pulls you out of execution and back into observation mode. Think about it like this. Imagine trying to drive while constantly asking yourself, am I steering correctly? Am I braking smoothly enough? Am I driving like a good driver? You'd become stiff, jerky, over-controlled, and that's exactly what happens in trading. Traders fall back into this trap because they mistake emotional commentary for discipline. They think if I keep checking my mindset, I'll stay in control, but control doesn't come from commentary, it comes from procedure. This is why so many traders feel like they're doing everything right, yet still feel tense, hesitant, and mentally exhausted. They're executing and evaluating at the same time, and that's not how performance works. Here's a subtle difference most people miss. Self-awareness is useful after the trade. Self-monitoring during the trade is interference. During execution, the only question that matters is, Does this meet my rules? Not am I confident enough? Am I calm enough? Am I disciplined enough? The moment you start checking your emotional temperature mid-trade, you're already distracted, and distraction in trading doesn't always look like chaos. It often looks like hesitation, early exits, and micromanagement. Another version of this trap is over-explaining your own behavior. After a loss, traders would say things like, I lost because I hesitated because I lack confidence because I'm inconsistent. And now, instead of learning from that trade, you've built a story about yourself. That story feels insightful, but stories are sticky, and once the story becomes identity, you start trading to confirm it. This is why traders who overanalyze their psychology often stall longer than traders who barely think about mindsets at all. The fix is simple but uncomfortable. You have to trust the system that you've built and stop narrating yourself in real time. Execute, log the result, review later, no commentary in between. Because the goal isn't to feel like a disciplined trader, the goal is to behave like one consistently enough that feeling becomes irrelevant. And once you understand this trap, you're ready for the final shift. The one idea I want you to walk away with and remember every time you sit down at the charts. Let me leave you with this, and I want you to really sit with it. Most traders think their problem is a lack of discipline or confidence or patience. But discipline isn't something you find, confidence isn't something you wait for. They're simply side effects of the story you tell yourself before you act. If you keep telling yourself the most honest version of your past, don't be surprised when your future keeps repeating it. Because the market doesn't respond to who you were, it responds to how you behave consistently right now. So maybe the goal was never to be brutally honest with yourself in the moment. Maybe the goal was to be usefully dishonest long enough to build the behavior that eventually makes the lie unnecessary. Truth builds understanding, belief builds results. If this made you stop and think even a little, then it's already done its job. You don't need to agree with everything that I said. You just need to notice what voice shows up the next time you're about to click buy or sell. So here's what I'd genuinely like you to do. The next time you're in a trade, listen to your inner dialogue, not to judge it, just to notice it. And if you catch yourself repeating an identity that's been holding you back, try to rewrite it just once and see how it changes your execution. If this video connected with you, let me know in the comments below, not with the results, but with the line you're going to replace. And if you know another trader who's clearly skilled but keeps sabotaging themselves, send this video to them. They'll either thank you or get very uncomfortable. Either way, it'll plant a seed, and I'll see you guys in the next one.